I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show interest rate update. It's June 13th. It's Monday. And boy, we have a big one for you today. I mean, this is a lot's happened over the weekend since Friday.
That's right, Monday. You never know on Mondays, right? This is one of those days.
That's right. And, of course, if you're new to the channel, be sure to subscribe, comment, and like. And before we get going, this is for informational purposes only.
That's right, folks. We're smart, but we're not that smart.
That's right. Okay. So, right off the bat, on Friday, we had that inflation report, the CPI, come out. And on Friday, we were showing rates like on the 15-year or the 30-year fix is what we see up here. We were showing them about 5.125. Well, boy, and this was after, like 4 hours after that inflation report came out.
Right, but this was still before they actually adjusted midday.
Right. We did our recording. But it had already happened. You know, the inflation report had already been out for a couple hours
before. Mm-hmm.
So rates were at 5.25, and then about noon,
5 1/8.
Oh, so 5.125, 5 1/8, right? And about noon Arizona time, all of a sudden rates just started really hammering up, and over the weekend, as now you can see, the stock market's really being hammered down. We're down about another 2.5 to 3 points on the S&P 500. But the 30-year fix, we now see at 5.5%. And then the 15-year fix at 4.75%.
The 5-year ARM at an even 5%. The 30-year FHA, 4.75%. And the 30-year VA, 4.75%.
And these interest rates come with no points. There's no discount points.
No hidden fees.
No hidden fees, all right? This is these are priced off of these conventional FHA and VA assumptions, or these scenarios right here. And I want to show you something that we haven't done before and then we're going to try to track this more closely. Mortgage News Daily is a website that you can go to anytime. And what you'll notice is it tracks the average interest rates that borrowers are getting around the country.
From all the banks.
Yeah, and they are surveying.
Mm-hmm.
And this is what Tom and I have been telling a lot of people is that 9 out of 10 times you call up a lender right now and ask them for a 30-year fixed mortgage and you have excellent credit and whatnot, you're going to get an interest rate 6%. This is 6%. Right now, the average is 6.13% on a 30-year fix. Again, let's go look at ours, 5.5%. And I say that's ours. That's based off of this scenario right here. We're seeing higher rates.
Which our scenario should be very similar to that scenario that we just compared it to.
Yeah.
So it's not that our scenarios are going to be that much off. I mean, they should be almost identical.
Yeah, these are. So again, it's not it's not probably an exact apples to apples, but interest rates that are being charged by banks, the majority of lenders out there are charging high rates. And why do rates matter? You know, and this is what this next chart's about. It is showing everybody here. If we have a $400,000 loan at 5.5% interest, which is what we would give today based on our scenarios, the payment would be $2,271, which is $127 less than if the interest rate was at 6%.
That's almost as much as a car loan, kind of a small car loan. The difference between 5.5% rate today, calling the Mortgage Brothers, versus the typical interest rate out there, 0.5% higher, that's almost a car payment difference a month.
Yeah, and so if you were getting a 6% interest rate, that in order for you to have the same payment as 5.5%, you would have to lower your loan amount $21,000.
Right, you'd have to either be okay with having a higher payment by $170 or by $127, or reduce your loan amount by about, is that loan amount or purchase price?
This is loan amount.
Loan amount by $21,000.
Right. So when you are, and again, I mean it. This is. Most people think that interest rates are the same. It's just like buying water at the store or gas at the gas station. Gas at the gas station, you shop for gas, right?
Well, how about gas? That's exactly right.
You're looking at gas at Costco. You're looking at gas at Shell. Mortgages, the differences between quotes, 90% of lenders are going to be charging. And I mean, most of the agents, most of real estate agents in town are probably even referring to lenders in Arizona that probably are charging 6% today on a 30-year fix.
Mm-hmm. So if you're seeing those rates and you're getting close to putting an offer in, call us. I mean, this is about as simple, I think, as it gets. It's just simply here letting you know the difference between what's out in the market and what we can do.
That's right. And again, we're a mortgage broker. We have great service, great rates, the whole package. And we're going to next show you right now. This Wednesday is the big Fed release date. The federal, the Fed's going to be talking about, Jerome Powell is going to be announcing whether or not he's going to be raising the Fed rate 0.5% or 0.75%. Just last week, this is before that inflation report. Just last week, there was a 94% chance that the Fed rate would raise 0.5%. Okay, so this 0.5% used to be 94%. Now it's only 80% chance.
Right, and that was as of what time today?
This is this morning.
That was this morning.
Yeah.
So today it could be even slightly, or right now it could be a little bit different. But I guess the big point is that these are all probability. What did you call them?
That's right.
It's just probability projection.
On the Chicago Mercantile Exchange, there are option traders who are basically trading the market and making bets on what those rates will be. And those guys they're very good at predicting. What they're right now, they are predicting based on their option trades, 20% chance we'll have a 0.75% rise in the Fed rate. And that's what's impacted our rates. Right? Because it's the surprise. It's what we didn't know. That inflation came in at 8.6%, and now it's driving up the potential for a higher Fed rate hike.
Okay, good.
And we will keep you posted on that on Wednesday. So just be sure to subscribe and comment and like on anything you want to say on that. But on Wednesday we'll report. This last slide here shows you the 30-year fix big trend. From 1971 to today, where it's just that interest rate 30-year fix has popped out here. You can see here on the bottom part, this is the Fed rate, where the Fed rate is right down here right now. This is where the Fed is now, and the interest rates, this is where they want to be up here based off of the forecasts.
Yep.
And you can see the interest rates go first, and the Fed rate usually follows.
And that's why they talk about the Fed rate being a target. They do not set it and stamp it. They actually are pushing a certain target because they don't have total control over that.
So my little markings here, they're like little rough markings, but those are the projected. That's not where we're at. This is just the pathway to get there.
All right, good.
So we'll keep you posted. We'll be back tomorrow, everyone. Take care.
Thanks, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.